Okay, welcome everyone. So we're going to look at a couple things today. Today is Fed Day. So the Fed is going to come out, talk about likely not raising interest rates. There's talk that they're going to potentially talk about their programs and maybe shift their program to buying the long bond, the 30-year bond, or maybe some long, 20-year duration bonds. So we'll look at that. That's interesting as of this morning. And the Fed, this market, I believe, for the most part, over the last 2 to 3 years, has really been trading on the Fed and on stimulus, and really for the last 10 years, basically. But especially for the last 2 to 3 years, a lot of the volatility in the markets has been due to the Fed. Either when they hike interest rates, the markets sell off pretty hard, or then they cut interest rates and the markets rally. So a lot of the volatility comes from the Fed. So today's an important day. Let's start off here looking at the NASDAQ futures. So clearly they're setting up for a big move on the Fed. And we have a bearish rising wedge right here. So this should break to the downside. However, you never know what's going to happen with the Fed, whether they break it to the upside and then reverse it and then break it to the downside. That's very possible. So watch for that. There's a lot of whipsaw signals on the Fed day. So if you see some sort of a ramp higher and then a quick reversal, then likely that reversal is going to be the real move, and then the market's going to sell off. This bearish rising wedge tells me that we should resolve to the downside at the end of the day. But again, you got to a lot can happen on the Fed day. So as of right now, I expect they're just going to chop it around here for another hour or two, get it, we're going to be right in here, and then the Fed's going to come out and we're going to see where this thing breaks. So good luck on that. ES, ES, all I really see is it just kind of working its way upward within this price channel. We have this lower trend line support right here, which has not been broken on ES. So look for the Fed and what does that do? Does that bring ES down to the support line? The Qs tells me the markets are going to sell off, but we have to just wait and see. Let's look at triple Qs here. So same deal. Triple Qs kind of just, over the last, really yesterday and today, the triple Qs is just looks like it's really just gone into autopilot rally mode on really low volume. So we're just seeing the market continuing to be, bid up on low volume. And I wouldn't expect us to go much beyond this area before the Fed. So again, when the Fed comes out, we'll see where this thing wants to break. What I'm anticipating, could be wrong, of course, but what I'm anticipating is this breakdown candle. This was your sell signal, and we're seeing this kickback rally. So they're going to pop it just slightly above here, run some stops, and then shortly thereafter it will reverse. That's what I'm expecting. So we'll see how that plays out. If a reversal takes place, we'll go back to the hourly here. Then I would look at, really the first line of support. Well, it dropped from, depending on where we're at, but we dropped down to there. Now I think we go farther. So probably down to 304.20 roughly. And then 350 is another level. So if we get some real selling coming in today, then we could easily get down to this 350 level. That would be a drop from where we're at of about 2%. That's very plausible on a Fed day if you get a big sell-off. Okay, and here's the SPY. It's really just been walking up in this price channel, this upward price channel. And so, again, there's nothing, it's in an upward trend. We do have negative divergence right here on the daily chart telling me that this trend, this upward trend, will soon likely reverse. Doesn't have to. We can always burn through the divergences. And, if we get an impulsive buy, a bunch of buying coming in randomly, then you can burn through the divergences. But as of right now, negative divergence, and they're confirmed. You see the PPO, see the bearish crossover right here? You got the bearish crossover. So confirmed negative divergences, and yet we're in an uptrend. The volume's been pretty thin lately, so we'll see what happens after the Fed. That's really what's going to likely move the markets. one thing I want to point out, it's interesting. So TLT, it's an interesting looking chart, and it's bullish. It has bullish technical posture. Here's the thing. When you look at the daily chart, you've got a clean bullish divergence. See that? See how the momentum has been moving up? And we just haven't really broke impulsively to the upside. You've got, and this thing's choppy. That's just the nature of this. But you can see each one of these lows were divergent lows. So this was a divergent low. This was a divergent low. And the buyers are stepping in on these divergent lows. So it's interesting. Also this morning, if you look at the hourly chart, you'll see that they're buying the long-term treasury bonds. What does that tell me? Well, that tells me that people are buying protection and possibly anticipating the dollar to break higher. So let's look at the dollar here. And so the dollar, if I go to the daily, you can see that the dollar has bullish divergence as well. So here's your bullish divergence. Now, yes, much lower, and we'll burn through that. So it's not fully confirmed. And if you look at the PPO right here, we don't have a bullish crossover. It's still just pointed down. So momentum is still down on the dollar, but we do have a divergence in place as of right now. So if the dollar gets bid up, then you're likely going to get that bullish crossover on the PPO and start to confirm this divergence. The other thing to take note of is the dollar has been creating a bullish falling wedge pattern right here. So, and we're really right there at support. Looking at the hourly here, you can see that, this morning they brought it down, but then the buyers stepped right back in. So there's buyers down here buying the dollar, thinking that maybe the dollar is going higher. I'm not so sure. We'll see. This is going to be interesting, especially for the gold trade, because if the dollar rises and you get some sort of bullish break, especially a bullish breakout of this wedge pattern, and you break to the upside, you could see the dollar rise all the way up to this green line here. Where do I get that green line? Well, go back to my weekly chart, and you can see here, this is like your longer term support. And we haven't really had a full back test of that trend line. So, we came close right here, but they sold it down again. So if the dollar breaks to the upside, we could see a move all the way up to this 96, 97 area. Pretty substantial rise in the dollar. And I would expect the markets, the stock markets will suffer. They will sell off pretty hard if the dollar rises. So it's something to watch for. We do have, and you can see here also on the weekly, there's your bullish divergence right there. Oh, if I can get it. There's your bullish divergence in the weekly chart. We have a new lower low in the dollar, but a higher low in the momentum. Not confirmed, of course. So this can obviously, change, and will likely change after the Fed comes out. But if you see a bid in the dollar, watch for stocks to sell off pretty impulsively. So let's look at gold now. Here's the one thing I don't like about gold bullion. I started to build a position in Barrick Gold. I might cut that position until after the Fed and then buy it back, depending on what I see. I'm going to kind of determine that before the Fed reports today. The thing I don't like about gold, there's a lot to like about it, but there's some things that I don't like. One, I don't have any bullish divergence in gold. So on this week, well, the weekly, but really the daily, there's no bullish divergence. You can see here momentum at this point was moving down, moving lower, and price right here was moving lower. Then we've had momentum starting to move up, and we have price moving up. No divergence. There's nothing telling me that there is a change in trend. So if that is basically still intact, then it's really still a downtrend. And you can see price is trending down and momentum is still trending down. So I would prefer to see some sort of a bullish divergence start building a position once that bullish divergence shows up, and then you wait for the bullish break. So what does that mean? Well, that could mean that we see another move down in gold. And if we do see another move down, let's say we see an impulsive move down, undercut these lows right here, about 1775 or so, just slightly undercut them, maybe come down to this trend line at 1750. And if it does that pretty impulsively, then you'll get that bullish divergence on the daily chart. It'll look something like this, where your momentum will look like about that, and then the price will be down here, and that'll be your divergent low. So if that happens, that would be, that would be the area that I would be interested in, adding to gold for sure, if not just outright buying more. And the way I trade gold is through the gold miners. So here's Barrick Gold. Now Barrick Gold already started to show the bullish divergence. You can see here on the daily, there's your bullish divergence. We had a divergent low right there. So I started to buy, and we've had a breakout as well. So in general, the markets look, this looks bullish. It's just that gold bullion that doesn't. And some of these other miners don't have any bullish divergence as well. So really, Barrick was one of the ones that really started to show it, but the others don't fully have it. So what does that mean? Well, if I go to the hourly, perhaps they're going to sell this thing down. Maybe they'll sell it down and slightly undercut the recent low right here at about 2240 today. Maybe that's after the Fed. They sell it hard. Bring it down, keep the bullish divergence, but make a new marginal low. And again, that would likely be a pretty good buying opportunity. So I'm not so sure. I don't know what the Fed's going to do. I'm going to be watching the dollar as the Fed reports, and we'll see what happens. But there's some scenarios to lay out. And here's this coffee trade that's been working so far. But the thing is that a lot of this plays into the Fed as well. So you can see we have negative divergence here on the daily chart. So I don't like that in coffee. And right now we have a divergent high with that negative divergence. It's not confirmed. And in fact, you look at the PPO, we had a bullish crossover right there. So mixed signals really. And so I'm not so sure on this one either. Again, that's kind of the nature of the markets. A lot of the time they'll set up and keep both sides guessing at a key moment. And that's kind of where I think we're at right now with the Fed coming out. So if markets sell off and the dollar rallies, Joe and commodities and gold, they should sell off. They should fall. If the dollar falls and falls impulsively, look for gold and these commodities to really rip higher. Another one, corn, is really setting up for a potential breakout. You can see here, going back to the daily chart, this is going back to 2014. Here's your downward price channel right here. And you can see right where we're at right now is we're just tagging that upper resistance trend line. So it looks like it wants to break higher, but again, it could just get rejected right here based on what happens with the dollar. Shop just a second ago made a divergent high. You can see here they popped it slightly above the most recent high right here, and that's a divergent high right there on the daily. So high likelihood that fails. But again, you need to see, it can also just continue higher and burn through the divergences. So typically what I would like to see on this is for some sort of rejection candle or reversal candle, something that, starts to impulsively sell off. Likely we'll get that when the Fed comes out if the market starts selling off. So watch for that. But that is in place as of right now. And I don't really see anything else that really should be pointed out this morning. Likely after the Fed comes out, there should be some fireworks, and the charts will likely change as at the close. So I'll probably put out an end of the day video after we see really what happens with the Fed, and but all the price action that's taking place this morning is I just discard it for the most part. I don't look at it. I mean, I look at it, but it's all on low volume before the Fed meeting. It's just, it's not anything that really matters too much. So after the Fed comes out, that's when people start moving the big money around, and that's when we're going to want to That's what you'll want to pay attention to. So again, that's all I got. Thank you, everyone. Catch you probably later this afternoon. Bye.